Hey, good people, how you doing? Welcome back to Stock Up with Larry Jones. We got a lot to get into today, but at the end of this video, make sure you check out the links below. Let's get right into it. There's a lot going on, but I want to talk about something at the end of this video that is going to help most of you guys in your trading. So make sure you watch this to the end and do me a favor and hit the like button right now. Thank you again for 600,000 subscribers as you continue to share this page. Let's get right into it. This is recorded on Friday around noon Eastern time. So I want you guys to look at this and I want you guys to see how bolsterous these indices are. All right, look at this. Almost 600 points on the Dow, 52 points on the S&P. Look at that, 108 points on the NASDAQ. Really looking good on a Friday. And this is even looking better than it should, right? It really is looking better than it should because of what happened this morning. Let's take a look at this, all right? Let's just take a look at this. Payroll rose 339,000 in May, much better than expected in resilient job market, okay? Resilient. So you guys know that strong job markets used to equal bad market, bad stock market. Now we are being shown by the stock market that it is resilient in spite of. And that's why I have shifted from bearish to trade the market we're in. You've guys heard me say that all this year. You got to trade the market that we are in. Do I expect that there is going to be a recession? Yes. When? I have no idea. I was thinking at the end of this year, which still could happen. Some people say Q1 of next year. But until then, I've been showing and proving to you guys we can make money. Now, let's just take a quick listen at this and I'll be right back.
And the numbers are out for the May jobs report, and boy, it certainly wasn't on the weak side. 339,000 non-farm payrolls. That's the best since January when we were at 472,000. Private payrolls, 283,000. The unemployment rate, 3.7%. 3.7%. There is a surprise. Last time we saw 3.7% was October of last year. To find a higher number, you have to go back to February of last year. That's quite a ways back. Now let's look at those earnings. Yes, that 0.5 turns into up 0.3, up 0.3, up 0.3, and we've had many of them. That is the lowest month over month since the lowest one in February when it went to 0. Now, if we look at what's going on year over year, 4.3%, coming right down to that threshold I believe is important at 4.2. 4.3 equals March, and that is the lowest level going all the way back to June of 21 when it was 3.9%. Let's look at the work week, average hourly work week, 34.3. Now, that doesn't sound like a big miss. It's down 1/10 from what we were expecting and down 1/10 from the rearview mirror. But trust me, it makes a bit of a difference, especially if you're looking at things like productivity. Finally, labor force participation rate, unchanged, 62.6. It's what we expected. It's what we had last month. It's what we have this month. How does 62.6 compare? Well, the lowest read we've had of late has been 62.3, and that was, I'm sorry, I take that back. The best rate that we've had is 62.6, and we want to pay attention to that. So we're equaling. How many have we had? We have one, two just this year alone. This would make it number 3. And finally, the underemployment rate, known as U6, is 6.7%. It ticked up a bit. We've had 6.8 as the high ground for this year, 6.6 the low ground for this year.
The question is, can the market be resilient in a strong job market, a hot jobs report? Okay, can the stock market still do good? Because we do know that the Fed's job is to cause higher unemployment, and that is not working. So now the discussion goes from the debt ceiling back to the Fed. Will he raise? will he raise? And now, because of the strong jobs market, or the hot jobs report, should I say, low unemployment, that means that the Fed has more runway to what? Raise interest rates, which is negative for the market. It's negative for the stock market. So when the question is asked in this trading season, could we have a strong economy while the Fed is raising interest rates and still have hot jobs report? Here's your answer. And on a Friday at that, the answer is yes, yes, and yes. Now, there is another reason why the market is so hot right now, and here's one of the reasons why.
The bill to avoid a catastrophic default on the nation's debt is set to be signed into law today. The Senate giving its final approval to this debt limit deal overnight, sending it to the president's desk just days before Monday's deadline. NBC's chief White House correspondent Peter Alexander joins us now. Peter, good morning. Walk us through these final moments.
Hey, Savannah, good morning to you. That overnight vote, just before midnight, actually, showing just how quickly the Senate can get something done when it wants to. The final tally, 63 to 36. Notably, a lot more Democrats backing the final bill than Republicans. President Biden, as you noted, he is expected to sign it right away. And then tonight, for the first time of his presidency, he's going to deliver an Oval Office address about this bipartisan effort after weeks of negotiations, deal making. What they call the Fiscal Responsibility Act will raise the nation's debt limit. It'll put caps on federal spending for the next 2 years. And most importantly, and this really was the urgency here, it avoids a catastrophic default that would have wreaked havoc on the economy. The federal government had been set to run out of money to pay its bills this coming Monday. Some good news, by the way. Moody's, one of those top credit rating agencies, reaffirmed its AAA, its top credit rating for the U.S., suggesting that it sees no reason for a downgrade like when this happened back in 2011. And I think, Savannah, most strikingly throughout this process is how the political middle won out. A coalition of lawmakers from both sides, progressive Democrats and more conservative Republicans, opposed.
If you guys remember, in 2011, we lost our AAA rating and we got downgraded by Standard & Poor's. We got downgraded to a AA rating, which caused the stock market to fall about 19%, right? So let's talk about something else. Let's talk about lessons that will help you. Most of you that are listening to me, these lessons will help you make more money. So now I just want to read a few things and explain, right? So you guys know I've been doing this AI play, but really it wasn't just me making money on AI. It was really to show you guys how I do what's called momentum trading and how I averaged around $2,500 a day doing momentum trading. Now, listen, for someone else, they make $25,000 a day, right? I was able to average $2,500 a day. But someone else could average around $250 a day. But the lessons are in the losses, not in the wins. The lessons are in the losses, okay? So I want you to write that down. Number one. There's only 3 points to this. Number one, the lessons are in the losses. Please write that down. People that don't write stuff down don't get it. You know, you got to write the vision and make it plain. The first thing you want to do is write something down. I was in a conference a while ago. It was actually at a church. And the gentleman walked up and down the aisle and he said something. He says, write that down. And people, yep, I'll remember it. No, you won't. And then what he just said was, you know what? You could have $500 to start whatever you want, and just write that down. And people, I didn't write it down, right? He walks up to the aisle. He says, anybody that wrote it down, hand it to me. There was one person, there was a long aisle, one person that handed it to him. And you know what he did? He handed him $500. And I didn't write it down. Now, writing it down is not just like that, but it's something that puts it out. When you write something down and see it, I want to talk to you guys about disciplines. Now, For me, and this is going to help a lot of you guys, the worst day to trade for me is a day after a big win, right? For those of you that keep having this big run up, whether it's regular stocks or options, and then the next day you blow it up, or you blow it up on the next 3 days, then do something as simple as this. My lessons I learned from myself. And what was that is, I don't trade the next day. I try not to. I did this week, but I only traded with actually less than a third than what I traded the previous day. That's the second thing. So if you always blow up your account the day after you have a big win, don't trade the next day. Just don't trade the next day. Don't do it. And you will be surprised at how your earnings will go up, because after a win, this is number 2, after a win, the biggest person or the biggest threat to your money is you. So I protect my money from me. Why? Every time I sit down to do a trade, I have my book of disciplines there. And sometimes it's the most basic things. Okay. So let me show you guys something with point 3. Now, if you've been following me, as you can see, let's go to the bottom. All right. Let's go to the bottom. Let's go to AI. AI, yesterday, I had a call on, you guys remember from yesterday's video, right? I had 7 contracts on AI, which is C3 AI, right? Up $1,385, right? And so something told me to take profits there, but I'm like, no, it's going to run. As you guys know, it fell, right? And when it fell, I was up $1,385. Because I had so many plays, I did what I should not do. I literally did not set my stop loss. So that's point number 3. Stop loss, stop loss, stop loss, right? And I'm so busy making videos and telling you guys to set your stop losses, I forgot to move this one up. So let me rephrase that. I had a stop loss. I forgot to move this up. So I move my stop loss up as the price goes up or as my profit goes up. And so out of the $1,300, I gave back about $250 of it by not moving my stop loss up. Follow? So then what happened was, as you can see AI at the bottom, now I know that it has run up too much. Remember the day before I said it ran down too much. So now, as you can see, second from the bottom, as you can see now, I have a put on AI. A put meaning that it's going to fall down. And so what did I do? I made my money back. What do I have set right now while the market is up like a bull, while the Dow is up and everything up? I actually have my stop loss set, and I hope it does trigger. Okay. And as you could see, I entered into some Tesla options. The SoFi has been there. And I also entered into a Meta option, a different Meta option, and an Apple option. And Larry, are you going to hold because they're going up? It's Friday. No, I'm not. I'm going to sell them all. Now, I don't trade like anybody else. I don't try to be like anybody else. I'm going to take profits. And then if I see fit, then I will get back in. I know, hey, Larry, I see that you have some of those set out a month, because I like to give myself time. Remember, if I plan on holding an option for a week, for a day, I set it out a week. If I plan on holding it for 2 days, I set it out for 2 weeks, 3 days, 3 weeks, follow. Now, this is all momentum trading. And yes, you could do this without a chart. I've done this entire week, but this entire week, I didn't look at one chart this week, because sometimes I'll look at a chart and sometimes I don't. And that's another thing. Do what you're good at, but remember, the lessons are learned in the losses. So profits, 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 take profits as often as possible. Number 1, it's actually 4. Number 2, write it down, write it down. Number 3, the lessons are in the losses. The sooner you learn your lesson, the more money you will be able to make. And number 4, is if you see a pattern where you blow up your account the next day, then make sure that's the day you don't trade. I don't care how hot stocks look. The more you limit your losses, the more risk. Once you buy a stock or crypto, your job is to manage risk. Please share this page with someone else. If I've been any help to you, please listen to these disciplines that will help you to make more money. And lastly, invest in yourself. Invest in yourself by learning these things. One time I paid a ridiculous amount of money, but the lesson that I learned in that conference, I made enough money in that one lesson to pay for the conference. Make sure you check out the top link below, Stock Up You, and learn the stuff that you need to learn, because the stuff you didn't learn is costing you an earning. All right? Learn more, earn more. Hopefully this has helped you. Please leave me a comment, like, and if you like what you've seen and this is your first time, hit the like, subscribe, and notification bell. Have a safe and blessed weekend, okay? Live, love, laugh, and learn. And I'm praying that this market closes green.